Hey, what's going on, everybody? Welcome back. In today's Sacramento housing market update, we're going to cover buyer demand, housing prices, and mortgage rates. Let's jump right into it. All right, so first chart up on the screen is going to be the for sale, sold, and pended data for the Sacramento region. This is going to cover Placer, Sacramento, and El Dorado County. Now, all of the data is out for December. We're still in the middle of January, so that data won't come out until next month. We have just under 2,500 housing units listed for sale. That's actually been a downward trend from its peak in July of 2022. However, year on year, we're up about 68.5%. So there's certainly more inventory than there was last year at the same time. Now, if you look at the pending contracts, we've been on a downward trend since March of 2022. We saw a small peak in August, but overall the trend is down. So we're seeing a lot less home buyer activity, which is a good indication that buyer demand is slowing down. And a lot of it has to do with interest rates. Now, year on year, pending contracts are down about 37.7%. Now, if we go to the number of housing units that actually sold, so closed transactions, we were at 1,176 units. That is down year over year about 45.1%. And you can see there's been a downward trend since about April of 2022. Now, what I think is really interesting about this chart is that we saw this massive spike in inventory in July of 2022. We've been on a downward trend ever since. Now, I know this is just anecdotal evidence, but what I'm starting to see is that the homes that are listed for sale, it seems like they've been on market for 60 days or longer, or at least many of them have. The ones that are priced correctly, that are in a great area and are essentially those like really ideal properties for potential home buyers, those are still selling relatively quickly, but the ones that aren't checking those boxes, they're sitting for an extended period of time. And I think that's actually keeping this inventory slightly elevated, believe it or not. Now, the other thing to note is that these pending contracts generally lead to closed sales in a month or two because there's a lag. A lot of times the escrow takes 30 to 45 days or something like that. So whatever you put under contract, let's say in December, might not close until January or February. So based on where the pending contracts are, that's a good indication that January and February are likely going to be really low as far as actual closed transactions. Next chart is going to be average price per square foot. We are coming in at $311. Year on year, this is actually down 5.5%. That means that we are actually starting to see year over year price declines in the region. Now, real estate is local. Different areas and different pockets are going to be very, very specific. But as a whole, with the three counties that we are looking at here, the data is reflecting that prices are actually starting to come down or retract a little bit. And then that brings us to the average days on market. We're sitting last month at 48 days. So it's taken about 6 weeks to sell a property, whereas in May of last year, it was only taking 2 weeks to sell a property on average, and homes were closing at or above the list price as indicated by this green line up here. Back when the market was peaking, let's say, homes were selling on average for about 3% higher than the listing price. Now we're starting to see homes sell at about 94% of the listing price, which is an indication that the buyer demand is slowing and sellers are having to readjust their price and make concessions in order to be able to move their properties. Now, this is a good chart to just take a look at as well. The red line is the average sold price, whereas the green line is the average for sale price. So at the moment, we are sitting at an average for sale price of $786,000 with an average sold price at $581,000. I like to pay attention to the average sold price. So we're sitting at $581,000 as of last month. That's actually down 6.3% year on year. Same time last year, we were at $620,000. So the cracks in the housing market are starting to show up. People are feeling the pinch of affordability. And as a result, we're starting to see those prices correct. Months worth of inventory, we're sitting at 2.1 months. So if there was no other properties that hit the market here, it would take 2.1 months to sell everything that's currently listed, but that's certainly not an indication that we're in a buyer's market at this time. I've mentioned this a few times, but anything less than 3 months worth of inventory is still technically considered a seller's market. All right, so the data is indicating that the home buyer demand is starting to fall. A lot of that has to do with affordability, so we'll touch on mortgage rates here in just a second, but there's this really interesting standoff right now between buyers, sellers, and home prices. prices. It's almost as if the sellers are looking out the rearview mirror and they want to get the same price their neighbor sold their house for maybe 6 months ago or 8 months ago, but the market is totally different now. And then on the flip side, you have buyers that are looking directly out the windshield and they're saying, you know what, I want to wait this market out. I think there's more room for the market to fall or housing prices to correct. And they're just sitting on the sidelines waiting to get a better deal down the road. So it will be really fascinating to see if we see a big spike in inventory. I think that's the main thing that we need to pay attention to moving into the first half of 2023. All right, and the last thing I want to touch on is mortgage rates because it has a lot to do with affordability. Now, we saw rates peak out somewhere around 7.25% just a couple months back. They have since retracted and moderated a little bit. Currently, the 30-year fixed conventional loan is sitting at 6.15%. We have a 15-year fix at 5.37%. Jumbo loans are averaging about 5.72. And then we have your Govy products, your 30-year fixed FHA at about 5.7% on average, and a VA loan sitting about the same at about 5.82. Now, historically speaking, these rates are actually pretty good. However, home prices are historically high right now. And if you combine that with high interest rates relative to where they were over the last 12 to 24 months, it really is starting to squeeze affordability for many would-be homebuyers here. And it seems to me like something has to give in this market if we want to see more and more transactions taking place and more homebuyers and first-time homebuyers stepping into the marketplace. Okay, so I know the data here looks a little bleak, but I would like to end on a positive note. The good news is that if you are a potential homebuyer in this market, you're going to have a lot more opportunity. You're going to have a lot more negotiating power, and you're going to have more inventory that hopefully comes online here over the next few months. So a couple things that you can do to put yourself in the best possible situation. Number one, make sure your credit score looks really good. Dial in your savings so you're ready with your down payment and your closing costs and hopefully an emergency fund or a little reserves to give you some financial runway. And then just really set the frame or set the criteria for what you want to purchase. Check out some neighborhoods. Have some fun with it. Go drive around, find areas that you like, make a little checklist, start to hone in what we call your buy box so that when these opportunities come up, you can just act really quickly. And that's going to wrap it up for today's video. Thank you so much for taking the time to watch. Have a great day, and we'll see you on the next video.